TJ the Wheel Joe coming at you live. It is Monday, May the 19th, 10:42 a.m. Central Time, Texas time. We are back from what I'm calling the Philly food tour. Seems like all we did was eat. All we did was eat. Still haven't eaten a chili cheese steak. Why? I looked at them, had the opportunity. It just didn't appeal to me. They do not look good. They don't look good. It seems like it's steak. There's caramelized onions, or there might be some cheese. I don't really like any of those things. I mean, I like cheese. I don't do onions. And steak, I'm kind of indifferent. So I'm thinking I'm just not Philly cheesesteak material, I guess. So anyway, it was cool. A lot of culture, a lot of history. The people were hit or miss. Some were nice, some were not nice. So, you kind of feel the brotherly love, kind of sometimes. Sometimes you don't. Favorite places to eat was probably a couple places was Dante and Luigi's. There was another Italian restaurant close to the Marriott Old City. It's another Italian restaurant that was really good. The first night we stayed there. Then there was a Cafe Lift. We ate breakfast there. That place was good. Seemed a little sketchy though, as far as like the part of town that it was. Maybe it's just me being judgmental, but it seemed a little sketch. But Cafe Lift was a nice little breakfast diner. We went to some place called Maud. I didn't like that place. A lot of people do. Went to a place called Rouge. That was good. Went to a place called Bark, I think, or Park, Parc. That place was pretty good. If I had it to do all over again, now that I'm a little more familiar with the city, I would have probably stayed at the Rittenhouse Hotel. Because we went in there, and I liked that place better than where we stayed. But, I didn't have anything to do with the planning of the trip or anything like that. So it is what it is. But if I end up in Philly again, y'all can catch me at that Rittenhouse Hotel. Seems like probably the nicer places. The Four Seasons was okay too. We tried to go to some Sky Bar there, but it was packed, so that didn't work out. Anyway, let me check in with you guys. What's going on, Bola? What's going on, Stefan, Manish, Mike D, Ren, Mr. G, Order No Onions. Did you visit the famous Kensington Avenue? I don't think we did. We did we did the Liberty Bell tour, and we did the Independence Hall tour. I don't know if that's in that same area or not. What are your thoughts on selling cash gear puts on SoundHound? Man, I looked into that stock and did some research, 2 or 3 hours worth about a year ago. And I think there might be something there. My plate's full. So I'm not looking for any more work, if that makes sense. So I think there's a lot of stocks that you can sell puts on, make money on. I just won't be participating because my plate's full. So it's going to have to be something really, really, really special for me to want to add more work, because that's another earnings call. That's another sifting through the financials and all that stuff. And I don't really feel like doing that. Anyway, appreciate you guys tuning in. Wow, we have a bigger crowd than I thought. I'm not sure if Amit might not already, maybe he's not on anymore. 270 some people. They clicked the link on, or seen the link on X. 62 people live on YouTube. Appreciate you guys. We're going to get into it here this morning. Shamu, what's going on? Yeah, I'm not familiar with the price action, the moving averages, if they're making any money yet. So I really wouldn't be that helpful on sound. I'm just not familiar enough. What's going on in Atlantis? Do you ever sell call phone lines? Sometimes. I try not to, but I have. What's going on, Rich? Is that a helicopter on your picture? I think I do believe you saying that you were a helicopter pilot. Super cool. On way to the gym, right on. Good morning. Just want to say thanks. Learning a lot when you started with less than 80 and been able to take out 3K every month. Very nice. What's going on, Mark? Mr. International. Right on. I'm sure the premiums are great. It's just, it's about, like for me, premiums are one thing. Another thing is I need to have like a solid investment thesis. And I remember them having like a lot of patents and stuff. I want to say NVIDIA was invested, if I remember the research I did on it. I could do a little thing with ChatGPT or something, and kind of get the rundown on it. Oh, right on. That makes sense. Where do you see sweet spot for strangle with clean spark? I think right now I'm sitting at 8 on the puts and 12 on the calls. I'd be more comfortable at 14 or 15 on the calls because there's a lot of short interest on clean spark. So I think that there's a lot more risk running a strangle. I think there's a lot more risk to the upside than to the downside. So on a company like Clean Spark, I would recommend the covered strangle versus just a short strangle. Right on. That makes sense. Okay. Well, let's get into it, guys. So we're going to feature, we're going to go present. No, so we're going to go over here. Put me over here and time out. There we go. Or over here. That's better. So we're going to go over here. Maybe that's pretty easy to read. Okay, super. We're going to get into it. So we got ticker, we got trade type, strike, current share price, number of contracts, premiums. I have all of those at 0 because there's only one number that matters, and that's what Tasty Trade says. Expiration dates, status, out of the money, in the money, total collateral, potential market value if it's a covered call, and if it's a covered strangle, cash grab, short strangle, cash grab, etc. I've got the little notes there, and then this is the ticker on the stock. That's what pulls the data. So let's get into it. What do we got? We've got Amazon covered strangle. So when it's a covered strangle, that means that we own shares. So we own shares and we're selling calls against those shares. And we're simultaneously, we're also selling a cash secured put to acquire more shares. So we're trying to make money with the stock, whether it goes up, down, sideways, basically. But we do have a cap because we have the cover call on as well. And we got an agreement to buy the same amount of shares that we're willing to sell. We've got an agreement to buy the same amount of shares on the downside. So on Amazon, we're sitting at a 190 strike, 100 contracts. We've got an agreement to buy 10,000 shares of Amazon at 190, 7/18 expiration date. So that's total 1.9 in collateral. On Amazon, we've got an agreement to sell the shares that we own at $210 on 7/18. They're currently going for 205. So we're in good shape. So that's the sweet spot, essentially. It's 191 or 190.01 to 209.99. That would be the sweet spot. It's the difference between the put price and the call price. That's a sweet spot. Ideally, we want to be below 210 because we don't really want to sell those shares of Amazon at 210. There's that. Clean Spark, we have a short strangle. What's the difference between a short strangle and a covered strangle? On a covered strangle, we own the shares. On a short strangle, we do not own the shares. So this position is naked, mostly to the upside. But on Tasty Trade, it's kind of naked to the downside too because they only use a fraction of your buying power. So you got to make sure that you're managing your bankroll. So what do we have on the short side? So on the short put, or the cash secured put, if you will, we're sitting at $8. And it is currently trading at 9.79. So we're nice. We're there. We're out of the money. We're good. But it's also, this is 1,000 contracts. Now I got to fix this. They trimmed this position last week. And then on the call side, we're sitting at 12. So that is our sweet spot, 8 to 12. I want to roll and expand. Right now, we're already sitting in June. By the end of the year, I'd like to have a $22 to $24 strike on the call. And depending on how Clean Spark's going, maybe we're sitting anywhere from 12 to 14 on the put side of things. We have a nice little wide highway, if you will. That way the drunk driver, a lot of are also known as the share price, can make it all the way to the finish line. driving in between the lanes, if you will. So that's what we're trying to do. We're trying to create a wide enough highway so that we can eventually make it to the finish line. Google, another short strangle. Why? Because we don't own shares. So we got an agreement to buy 10,000 shares of Google at 160, and we got an agreement to sell 10,000 shares of Google at 175. Now that's a problem there. Why? If we don't own the shares. So there's risk, a lot of risk to the upside, an unlimited amount of risk. To the downside, it's not really unlimited because we know that worst case, it could go to zero. So we could lose 160 bucks a share. That's very unlikely. What's the lowest that Google could possibly go? I don't know, maybe 100 bucks. Major market crash, maybe 100 bucks. So we got about $60 of realistic risk. Improbable, yet realistic risk to the downside. So that's the way that I look at these sweet spots or these strike prices. Whenever I put them on, I'm like, okay, what's really the worst that can happen? I know on paper the worst that can happen is go to zero, but what's realistic? What's in the realm of possibility? In this case, I think 100 would probably be the absolute bottom on Google. So I feel like this is a trade that's very, very manageable to the downside. And it's also manageable to the upside because I don't see Google going to 250 like right here, right now. There's not a catalyst that supports that theory or that idea or that level of hopium. So Google is probably the best play that I have on the books for a short strangle because I think it's pretty range bound in that 150 to 180 range. So that one's pretty easy to manage, if you will. Good. Another short strangle. What do we got? We got 55 on the low side and 70 on the high side, right? On the short put side, it's 55. On the cover call on the high side, it's 70. So we got a little sweet spot of 15 bucks there. Hood's pretty volatile. I think at these levels, if you really believe that Bitcoin's going to 150,000, there's a lot more risk to the upside on Hood. Because on the downside, I think it's already shown it to us. It's like in the high 30s. So that's kind of manageable for me. And then this doesn't expire all the way until August. I got to go check that to make sure that to see if that's really true. I'm looking over here right now. Yeah, it is. Okay. NVIDIA, another short strangle. We're playing this one tight. Why? Because I wouldn't mind owning the shares. So we've got 100 short puts or cash secured puts at 135, and we got them for sale at 140. So I feel like there's more risk to the upside than the downside here. So this is now out of the money. Just been fluctuating all day, so I got to go from red to black. So we're managing this one, and the reason that I'm playing it real tight on the short side is to protect myself against the unlimited risk to the upside. But what's really the unlimited risk? I can see NVIDIA going to 200. So that can be a problem because why? We don't own the shares. It's a short strangle. It's not a covered strangle. A new short strangle that I brought back into the fold is Palantir. And I created a really big sweet spot here. 100 on the downside, 150 on the upside. I feel like I should not even have to manage this trade. Expires in June. And this trade paid $43,000. So that was really, really nice. And we're just going to kind of write it out. And I'm hoping to put this trade on over and over again and eventually increase the amount of contracts to 500, possibly even 1,000. Right now we're sitting at 100. So we got an agreement to buy 10,000 shares of Palantir, and we got an agreement to sell 10,000 shares of Palantir. And at a 150 strike, I feel like we virtually have no risk to the upside, in my opinion. To the downside, I think there's the risk, and that makes it exciting. Why? Because anything sub 100 now, Palantir has my interest. Anything sub 70 and Palantir really has my interest. Anything sub 50, I'm selling shit to buy Palantir because I think Palantir is going to $1 trillion eventually. Riot, short strangle again. Don't own any more shares of Riot. So how are we playing it? We got a sweet spot of 8 to 12. It's sitting at 899. Not bad. 1,000 contracts. This is also 1,000 contracts. Got Just fixing it as we go. SoFi, short strangle. Again, I had leaps on Riot and SoFi, cleaned those out. Sold those for a profit because I want to just run short strangles on here and cover strangles. That's what we did. No more leaps unless it is just an absolute steal of a deal. So SoFi goes to the $10 or $11 range. We'll talk about some leaps. Riot dips in the sevens. We'll talk about some leaps again on Riot. SoFi, 12 and 15. That's how we're sitting. And this, yeah, so this is the backstop trade, right? Yeah. So at $12, January of 2025, 26. And then we got an agreement to sell 300,000 shares. Holy cow. SoFi, and we don't own 3,000 contracts or 300,000 shares. We don't own 300. So that's a problem, right? That is a problem to the upside. But SoFi has been doing SoFi things, and it's been going down recently. So now we're sitting in an actual pretty decent spot. But you see here how that's potential market value of $4.5 million. So what's the risk of the short strangle real quickly? This thing shoots up to 20. I have to deliver shares at $15. So I got to be ready, prepared, able to manage the trade to the upside. I have to be willing to roll the cash secure puts up to collect more premiums. So that gives me the opportunity to roll the cover calls up to say 16 or 17 if it were to shoot to 20 to minimize some of the pain. The other thing that I need to be prepared and ready to do is buy the damn shares. So I've got to be in a position financially to be able to buy 300,000 shares of SoFi at spot to take the pressure off the upside. And we're in a position to do that. That's why I'm comfortable making these types of trades. You got to be able to manage your emotions, your temperament, your bankroll if you're going to play this game. This is wheeling 201 and 301, guys. We're not doing 101 anymore on the channel. What do you mean by 101? Sell the cash secure put, wait and see what happens. Sell the cover call, wait and see what happens. That's cool. It's slow, though. It's slow. This is a lot faster. You're going to get to the end result a lot faster playing both sides simultaneously. Tesla, featured position as always. What do we got for July? We're sitting at a 280, 400. This is a covered strangle, though. Why? So this part's actually covered. Let me change that. Because we own 6,500 shares. So this is only 35 contracts. So that part's covered. So we got an agreement to buy more shares at 280, and we got an agreement to sell the shares we got at 400. I'd probably be okay selling them at 400, truth be told. Then down the road in January, we've got the biggest short strangle of my career going at 280 and 450. That's a sweet spot. We got an agreement on the low side to buy Tesla at 280, on the high side to sell Tesla at 450. Y'all see the problem there? We don't own the shares. So you got to be able to manage, and we're talking about $27 million worth, right? We got to be able to, if Tesla were to get a sign called away, we would, I'd blow up the account. So you got to know exactly what it is that you signed up for. That's what it says, naked calls there, if I learned how to spell. Naked calls. Defend, roll. Shit. I screwed it all up, didn't I? Hold on 1 second. Holy moly. I'll fix that later. Defend, roll. Defend and roll. So I'll have to, it's going to bother me if I don't fix it though. Hold on 1 second. Let me do this. Let me go here, delete all that. I'm going to go over here, copy the formula, put it over here. paste, and then put this at 450. That should give me back my, it didn't, shit. Hold on. It's going to bug me now. Oh, yeah, I know what it is. This is 600, I think. There it is. There it is. And this is a naked call, defend, roll. There we go. Fixed it on the spot. And then we have the TSLL. And this is just a cash secured put, actually. So we'll just do this TSLL. So we've got an agreement to buy 100,000 shares of TSLL at $12 in September. Took the covered calls off of TSLL. So we'll talk about all of that. So now what I want to do is I want to hit remove. I want to go stop screen. I want to hit present screen, share screen. We got to go over here. Y'all are going to see the kaleidoscope action. And then now I want to show the portfolio. So here we go. So on the 33 account, we're up 3,300. Got 310 in cash. We'll come back to the big account. On the intermediate account, we're down 2,700, 564 in cash. On my son's account, we are down 900 for the day, up collectively 1,100. We got 25,000 in cash. And then on the big account, we've got a cool 10,700 or 10,725,000 in cash. So not bad. So we're going to go on, we're going to stay on this account right now. I'm going to do a feature on my son's account here very soon, probably for members only or something, because I want to see what's the fastest way to get to $100,000. So I want to do like a little mini Wheelers episode on the small account and be like, this is all we got right now. We just got the 3,000 shares of Riot, and we got the coverage strangle going at 7 and 11. And then we got a coverage strangle on TSLL, 1,500 shares, and we're sitting at 9 and 12. Obviously, the 12 are in the money. So I want to see like what's the play out there. Because zero out this whole thing, we're up $1,000. That's awesome. Be sitting on $60,000 in cash. So what's the fastest way to get to $100,000? So we're gonna really walk through it, talk through it. So that's gonna be a nice little episode. But anyway, back on the big account. So big changes that I made earlier is I increased the strike price on Amazon. So we're sitting at 190 on the put, 210 on the call. So that's a covered strangle because we own the 10,000 shares. That's what makes it covered. On CleanSpark, it's a short strangle because there's no share ownership. And we're sitting on a sweet spot of 8 and 12. 8 on the low, 12 on the high. Google, short strangle. 160 on the low, 175 on the high. So not bad, playing it pretty tight. Why? Again, wouldn't be the worst thing in the world to own Google at 160, in my opinion. Hood, short strangle, 50 on the low, 55 on the low, 70 on the high. So 55 on the short put, 70 on the short call. I feel like the risk is to the upside right now because I'm super bullish on Bitcoin, and Hood is executing on a lot of metrics, guys. Let's just give him credit. So, we're kind of playing that game right there, and it is 88 days out. NVIDIA, I'm playing this one really, really tight because, again, even if it's just a swing trade, I wouldn't mind taking ownership of 10,000 shares of NVIDIA, buying them at 135 and selling them at 145, 150. I'd be perfectly okay with that. And it also gives me some freedom in case if Amazon were to get in trouble and get called away, I could just transition over to Google or NVIDIA. Some people would argue that those are better plays anyway. And here is the short strangle that is just picture perfect right now. And that is Palantir. We got 100 on the put, 150 on the call, and it's sitting right in the middle at 125. We're obviously down a little bit on the short side today on the put, but we're printing on the call side, and collectively on that position, we're printing $10,400. Not bad. Riot, we got the short put at 8, the short call at 12. It's closer to the 8 than to the 12, so it's doing okay, and it's pretty even across the board. Up $1,000 collectively. On SoFi, we got a massive, okay, so that's only 1,500 contracts. I got to go fix that. I have it at 12. I have it at 3,000. So 1 second. So let me go fix this. Let me go fix this. Where is SoFi? Okay, this is only 1,500. I feel better about it now. Okay, perfect. Okay. So SoFi had 12 on the put backstop trade. That one's doing very well. 31% or $103,000. And then we got an agreement to sell shares of SoFi that we don't own at 15. And that makes more sense because we had 150,000 shares earlier when I sold them. And now I'd be willing to buy them back because I'd have to buy them in order to deliver them. Or I could just keep rolling. That is an option as well. So, not bad. Tesla, here's the big position. This is why this part of the trade is covered because there are 6,500 shares owned, doing extremely well in the shares, up almost $500,000 in the shares. Then we got an agreement to buy 3,500 more shares at 280, 60 days from now in July. An agreement to sell 3,500 of the 6,500 shares in July as well, 60 days out at 400. We got a nice little sweet spot of $120 wide. And then down in the distance, it's even wider. We got an agreement to buy 50,000 shares of Tesla at 280 with an agreement to sell 60,000 shares of Tesla at 450. Obviously, we only own a tenth of that position, so that is naked. That's where we got to defend and roll. Eventually, I'd like this bad boy to be sitting at 500. When these calls are sitting at 500, I'm going to be sleeping like this because I know that the all-time high is like 513, reverse splits adjusted and all that stuff, but I just think it's extremely overpriced. I get it. The robots are coming. I get it. Robo-taxis coming. Full self-driving is coming. I get it. It ain't here yet, and it isn't printing to the bottom line. Show me when the Cybertruck starts printing to the bottom line. That's why I'm a little bit short-term to intermediate bearish on SoFi because I think the hopium can only take you so far. At some point, they're going to need to produce numbers that actually positively affect the bottom line because the bottom line numbers have been affected negatively for a couple of years now. And I'm just one of those realistic investors. I'm willing to call a spade. I think that Tesla is extremely overpriced right now. The potential is amazing, but I'm talking about for what it's worth right here, right now. And that's not really how investing works. Well, that's how it works in my mind. There's such a thing as overpaying for a good thing. And I think that right here at these prices, my fair market value for Tesla is 175 to 200. That's why the portfolio looks the way that it does. TSLL though, had to cover myself. So now I feel like I finally fixed the portfolio to where I don't have nearly as much risk to the upside on Tesla because I'm sitting on 100,000 shares of TSLL, the biggest insurance policy I've ever had. Got the shares at an average of 1084. So printing on those shares. And then we got an agreement to buy 100,000 more at 12. I don't know that I really want to own them at 12. I'd be more interested in the $10 range, $11 range. So potentially we could get up to 200,000 shares of TSLL, and I'm doing my best. Not to sell calls against those shares so that if Tesla goes parabolic, because Mr. Market's right and TJ's wrong. That happens a lot. I'm not going to fight with Mr. Market. I'm going to protect myself. But instead of buying leaps to protect myself, instead of buying more shares of Tesla to protect myself because those are very expensive, I'm like, well, let me get the 2 times leverage play on TSLL. And that is why I have those shares there as protection. Now, the argument becomes, is 100,000 shares enough protection? I think 150,000 is the right number. So I think I'm still 50,000 shares short. I don't want to buy them right here, right now. I'd rather just go get 100,000 more shares in the form of an assignment via a cash secured put, because if those get assigned, that means that this bad boy is probably trading at like 300 or so. And then now there's not a lot of pressure to the upside on my calls. So I would be printing over there on that side of the fence as well. So that is what's going on with the portfolio in a nutshell. This is going to be kind of short and sweet because I got FaceTimes. So what I'm going to do now is I just want to answer some questions that might be in the chat. And then I got to get on my FaceTimes. I appreciate the 845 people that have tuned in on X and the 96 people that are rocking with me live here on YouTube. What's going on, Shamu? What's going on, Atlantis? Do you ever sell? We talked about that one. Ciao, TJ. Morning. Let's roll on the way to the gym right now. We did this one. We did that one. Limit is done. We did that one. We did that one. What's going on, PB&J? Yeah, we did that one. That is nuts. That is a huge return. Appreciate you, Midwest. Looks like you have your crystal ball on Goog. Nice strangle spread. Appreciate you, Rick. Mike, my brother. Thank you for the inspiration and ideas on selling Tesla covered calls. I use that premium to buy more shares, basically exposing myself more to Tesla and getting paid. There you go. What's going on, Maria? You saw that 27 million and spelled naked wrong. When you work with naked options, for which type of investor is a good fit? How much skill does that investor got to have? I think you need 2 things. You need a big bankroll, and you need a real good temperament. You need a real good temperament. You know, somebody's not going to get too flustered. Somebody's going to be very even keel, and somebody that's just going to look at this as a mathematical equation and they need to solve for X. So I fit that bill. I fit that bill. So it kind of works out for me. And again, if I'm feeling pressure on the upside and I'm winning on the downside, right? My put's printing, but the calls causing me problems, I'm willing to increase the strikes on the puts. I mean, because that's what I did, right? I closed out TSLL, gave back like $500,000. Y'all been following. This is, I guess y'all don't know this. Y'all aren't part of the WhatsApp group, perhaps, but I know Mr. International is. I gave back $500,000 to free up TSLL, but then I collected $500,000 by going from 250 to 280 on Tesla cash secured puts, short puts. So I got all that money back. So you just, again, the type of investor that has the bankroll, has the temperament, has the know-how. It has a strategy that they're going to implement. With 500,000, what would you do? We own the compound and grow. QQQ or SPY? I'm probably more of a TQQQ guy. That shit, QQQ and SPY is way too boring for me. So call. TJ, how are you liking the P&L? I mean, it's obviously, I like it. It's easier to understand on the wheel tracker, but I like it because it's official, right? Like it's what's on the brokerage. And at the end of the day, that's what matters. At which point you can see yourself swapping Google for Amazon. I'm hoping I wouldn't have to. I can see a world where I can have both if I can get Google at the right price. What's the right price? Sub 150. And then I'm just wheeling it though. But then I'm not emotionally attached to either one of them, right? So I get $5, $10, $15 in capital appreciation. It gets called away. I started getting back into it via a short strangle. So I can still play it. I don't have to be married to the shares, if that makes sense. And that's why I'm playing NVIDIA and Google so close on the put side, That way it gives me more freedom and flexibility with Amazon, because I think all three of those are going to print, Tesla included. So that's 4 of the Mag 7, right, in the portfolio. What's missing? Microsoft, Apple, and what's the other one? I'm missing another one. Y'all can help me out. I don't know. I'm missing another one in the Mag 7. I don't know if that was Netflix or that was part of Fang. Like, I don't know. I guess I don't even know who all that Mag 7 is. So help me out. I'm missing one because I've got 4 of them, right? We got Alphabet or Google, Amazon, Tesla, Nvidia. I know Microsoft is in there, but it's not in here, but that's one of them. So I can't think of the others. I don't know. You were scared with Tesla at 230 2 weeks ago, and now you have puts at 280. No, I'm not excited about Tesla at 280. Let's be clear. I just did that because there's pressure to the upside in the portfolio, so I have to balance the buying power. So if you're going to play the short call game, it's not about being scared or being excited. It's about doing what the market's telling you need to do to make sure that your portfolio is in line and it's balanced. Because the most important thing whenever you're doing this is your buying power. So I know you're just like trying to be funny with that comment, but now let me educate you guys. So the most important thing with the portfolio when you're doing this thing is your buying power. Make no mistake about it. So there's plenty of cash. All that stuff's great. And we're talking about the options buying power. So there's $1 million in options buying power. Don't even have portfolio margin turned on yet. We're talking about this portfolio right here, the big one. And there's $2 million of stock buying power. So I can have $2 million of stock buying power just by turning on portfolio margin. So I've gotten in a bit of a jam. The only thing I got to do is turn on portfolio margin. Boom, there's $1 million right there. That's one thing. Another thing is to be able to deposit money like we have been. There's $750,000 that have gone into this account over the last couple of weeks. So that has helped me to stay the course. And there's a couple million, 2.25 million that's still on its way over to the account. So again, it helps me stay the course. But no, it's not like getting all excited. Oh my God, Tesla, I wanted it at 280 when I didn't want it at 230. I already told you what my fair market price for Tesla is, 175 to 200, but that's TJ's. The market says is we're at 337. So instead of being stubborn, you just have to roll with the punches and go with the flow. This isn't personal. This is business. So the calls were getting hammered. These guys were getting hammered. So in order to alleviate pressure from that side, I have to get more money on this side. And how can I show it to y'all a different way? We go over to trade. And we'll see the deltas. The delta is 19 over here on the put. The delta is 30 on the call. So can you see how that's not a balanced delta? It's not a delta neutral position because there's more pressure on the upside than the downside because the deltas are higher on the call side. So now let's go to the other one. Now let's go to the one in the distance, 240 days out. At 280, now I'm sitting on a 26 delta. On the 280 puts, now I'm sitting on a 28 delta because the 450 calls are at 39. So in a perfect world, I'd want to be sitting on a 39 delta, or I'd like for Tesla to chill out a little bit, maybe to go to 310. And then now it would be like a 29 delta matching me over here on the put side. So it's just about trying to get more delta neutral, if you will. So again, it's a game of math. It's not a game of emotion. It's not a game of, oh, you love Tesla at these prices. Now you don't love Tesla at these prices. No, I'm trying to protect my portfolio. I'm playing a game of math. I'm not playing a game of emotion. I'm trying to create a big enough sweet spot so that I can ride the trade out to the end and make, in this case, about $3 million, because that's about what's on the line with premiums that have been collected. So I want to go from collected to captured. The best way to do that is to widen the highway, expand, roll and expand, roll and expand, roll and expand. It gives you the best chance to not just collect, but capture. Because collecting premium is easy. Hell, I could probably collect another $1 million of premium right now if I wanted to. Capturing is a whole different thing. It's a whole different thing. So where would I feel most comfortable? Probably 250 on the low side and 500 on the high side. But I can do that right now, but I'm not going to maximize the premiums. So I'd rather expand the downside on some down days, and I'd rather expand the upside on some up days. So again, you got to have the temperament, you got to have the bankroll, you can't get personal with the market. You just got to roll with the punches. You got to be very, very flexible here. It's not about being right. It's about being rich. That's your quote of the day. It's not about being right. It's about being rich. Some of you guys are way too fucking enamored with being right, and that's where you're broke. I used to be there. I'm going to say it again. Some of you guys are way too fucking enamored with the idea of being right. You need to get enamored with the idea of being rich. This game is about being rich, not about being right. This isn't about being able to post on X or being able to post on my little feed here or somebody else's feed and telling everybody how fucking right you are. Why don't you go show people how rich you are? That's the name of the game. And whenever you guys get that through your head, you're going to be ready to win. I'm giving y'all some fucking gold right now. Hopefully y'all can appreciate that. There's so many of y'all that are so enamored with being right and you're broke. Think about that. Think about that. I'm trying to tweak your mindset. The game is to be rich. Let others be right. You be rich. You're going to have a lot more fun. Promise you. What's going on, Wheeling, Idaho? See you later on FaceTime. You've got it. I got to get rock and rolling, man. Maria, let's connect. I'm selling puts. I'm not super familiar. I'll look into that one and I'll have to answer it on another theme, on another stream. I like the little J Pal thing. I see it on the. Y'all are so creative, man. So creative. Is roll cover calls easier than rolling cash secured puts? I find that rolling cash secured puts is easier. Maybe because you're just not fighting gravity. Mr. Premium, the option. What's going on? What's going on, Mike K? Hit the like. Just got here. What changes did you make? Man, I made it a lot. I made a lot. Oh my God, we'll have to do a whole episode on taxes. I've been running Cover Strangle very well. You know, that's one that I thought about adding. That is one that I thought about adding is NVDL. Because I got I got Tesla, I got TSLL. We could do NVIDIA, NVDL. Then there's the Google one. There's the Amazon one as well. That's interesting. You know, that's interesting. What's going on, Chris? Meta. Thank you, guys. Thank you. Thank you. Thank you. Look at you guys, man. Freaking nerd herd in the house. So we got the Mag 7, Meta, Tesla, NVIDIA, Amazon, Google, Microsoft, Apple. Thank you. Thank you. Some of you guys were enamored. I wasn't being funny, guys. Somebody said that to me. That is not my quote. That is not my quote. It was a mentor that said, TJ, you're too fixated on being right, and that's why you're broke. It's your right to be right. But it's also a choice to be broke. Let me give you all some more gold here. It's your right to be right, but it's also your choice to be broke. You gotta fall more in love with being rich than being right. They don't always correlate. It's counterintuitive. I didn't understand it until I got there. And maybe some of you guys are not going to understand it either. And that sucks because if I understood it sooner, I'd have a lot more money. But I spent the first 40 years of my life trying to be right. I spent the last 10 learning how to get rich. Now that I got the rich part down to a certain degree, rich is relative. I want to be wealthy. Now I'm like, how can I create generational wealth? Because, you know, the good provider leaves an inheritance to his children's children, right? That's like a proverb in the Bible. So those are the things that I think about now. Anyway, I don't want to get too deep on a Monday. It's Monday, and I just got back from vacation. I gained 12 pounds, dude. 12 pounds in Philadelphia. I am going to go in there, and I'm going to work out like an animal. I'm drinking the Gatorade, the Powerade Zeros, the waters. I'm detoxing. I'm doing it all. We're going Rocky mode, baby. Rocky mode today. And moving on now, moving forward, Rocky mode. What do I think about UNH? I saw that somewhere here. Hold on. I could care less. Right. Here we go. What do you think about UNH? I don't think about it enough, but I can't dismiss it either because this company makes a shitload of money. It's a really, really big company. It's a company that's definitely not going out of business. So I feel like the risk to the downside is a lot less than the risk than so I feel like the risk reward, it's disproportionate because I feel like the reward is a lot higher than the risk is bigger, right? So it's definitely something that I need to look into. I just got my hands full, right? I got my hands full. I'm in the middle of the biggest, shortest strangle of my career with Tesla. I feel a lot better about Tesla now because I've got the shares of TSOL. So that part's nice. But I also have to have the discipline. And this is the part that's hard, right? This is the part that's hard because, dude, there's so much money I could be making on cover calls on TSOL. But then that wipes away my insurance policy. And that's the part that's tough. That's the part that's tough. So whenever I talk about like bringing NVDL into the fold and potentially, I think it's AMZU or something like that on Amazon. Not sure what it is on Google. Because all the Mag 7s have like that leverage play, is to buy those shares to quote unquote cover the position because it's a leverage play, right? So you don't need as many shares. That's the idea. So we'll see how it goes. You know, Tesla is the big guinea pig in this whole thing. And by the way, I'm hoping that this Tesla trade stays on the books for like the next couple of years. I'm not hoping this trade's done in January. I mean, I hope it's done from the standpoint of where I get to capture, I get to log the win, and then we start off a new strangle, and we're like maybe 350 wide or 400 wide, something ridiculous, and we're kind of doing it like 90 days at a time. But I'm saying I'm hoping that this trade is on Tesla for as long as I have the chance, essentially. Anyway, guys, I gotta get rocking and rolling. Got my first FaceTime. I appreciate each and every one of you guys. Sorry I wasn't able to do the recap. Yes, we'll do that on the Wheelers. Rewind it. You know, it's 47 minutes long, but I go over all the moves that I make. I appreciate each and every one of you guys. I hope I didn't come down too hard on you guys with the whole rich and right thing, but guys, there's a lot of truth to that. That is what changed my life financially. Is I got enamored with the idea of being rich, the heck with being right. So I kind of formed this little thing. You be right, I'll be rich. I'm gonna have a lot more fun. TJ the Wheel Deal signing off as always. May your sky stay blue, stock screen. Peace out. God bless you guys.